Sluggish Chinese growth has been a source for concern globally as the world continues to look towards the rising dragon for clues. And though the world's second largest economy has stumbled since policymakers unexpectedly devalued the yuan in early August, some still call this the opening of the China decade. Joining us for more on China is Sam Chester, analyst and China expert at investment management firm Clarity Capital. Sam, thanks for joining us, first of all. I mean, China's market has been in free fall, so to speak, since July. What has happened over the past 2 weeks for there to be such a sharp reaction from global markets?
For sure. I mean, I've been in here several times over the last few months, and we've been discussing the Chinese stock market, but we weren't quite seeing any effect like in the last 2 weeks on global stock markets. The key issue is really what you pointed to. On August 11th, China devalued its currency. It lowered its currency, which it hasn't done in years. Right. And by doing that, plus the fact that the overall economy in China was still very sluggish, that spooked investors around the world.
Why did it have such a dramatic effect?
So it really comes down to trust. Of course, when stock markets fall to the extent they did in the last few weeks, we're talking about irrational causes. We're talking about panic. And I think you could sort of point to three very quickly. One, people thought that by China reducing its currency, by the value of its currency, it knew that its economy was doing even worse than we know, because they're obviously privy to data that we ourselves don't know. So that's one. Two, again, the fact that they haven't lowered their currency in years, and they've actually been focused on slowly raising the exchange rate in Beijing. The fact that now they're lowering it suddenly, that spooked people. And the third one, of course, is that the decision was done very, very poorly. I mean, Beijing tries to exude an air of competence, which obviously markets around the world react to very positively, and in this case, they did the very opposite.
Right. Now, I mean, how much is China's economy really slowing down? Does anyone know?
So it's difficult, and asking do we know is really the right question, because for years, the only data we get from China, and that's actually the case today, is on the old economy, is on manufacturing, is on industry. And of course, what China's doing is it's transitioning from an economy based upon exports and manufacturing to an economy based upon internal consumption and based upon a service economy. We know that in the beginning of this year, services in China were actually growing, but we just don't have data on how the service economy and how consumption in China has performed over the last few months. So what we do have data on is the manufacturing. And what we see is that industrial China is not doing well. But since we just don't know, and since China's banks don't know, China's leaders don't know how the service industry is doing, they themselves have a hard time of figuring out whether the decline in the overall manufacturing is being balanced perhaps by an upward trend in the service economy.
Clearly, transparency is an issue in China. But I mean, what can you say in terms of the pace of economic reform in China?
That's what people around the world are really counting on. I mean, everyone understands that for China's growth to continue, for people around the world to still budget their growth based upon China, the reforms have to continue. What we have seen very clearly is that Beijing is cutting reforms related to its stock market. It's pushing back, it's cutting the policies that allowed the stock market to grow so quickly over the last year in Shanghai and Shenzhen, and then to collapse. And yet what we also are seeing, ironically, is that they're allowing a lot of the other economic reforms to continue. They have a lot of goals that those economic reforms are tied to internationally. China's hoping to get its currency put into sort of the global community's pocket of global currencies. They have issues tied together with the IMF. Right. And China and Beijing do not want to see those economic reforms be cut in half.
Okay, well, Sam Chester, thanks for joining us on the show. Well, that brings us to the end of the Economy Magazine, your daily source for economic report. Thank you for watching.